Good morning and welcome to today's pre-market video. Now in today's pre-market video we'll take a look at the FinNifty index since it has expired today. I'll take a look at what option buyers and what option sellers can do. Now before looking into that, now on the news front there's not much to discuss. This is, as I had said in Sunday's video, this week will be dominated by two prime things. Number one, the US election, as Trump and Kamala Harris basically, depending on the media platform, one each will say another one is going to win, but the official betting thing is showing Trump is going to have a clear victory, and I believe where people are putting their money, that will be more accurate than any poll, as polls will be heavily biased by the opinion of the guy who is taking the polls. But now all of that has caused a lot of uncertainty and confusion, and I expect that to continue affecting their markets, our markets, and all markets basically. And the other news will continue affecting us, as I said on Sunday, is this week the Fed is going to be meeting on November 6th and 7th, and they will announce whether they're doing a rate cut or not. The market expects a 25 basis points rate cut. If that comes, it will, I believe, already priced in. If that doesn't come, then that's going to be bad for the market. If it comes more than that, the market will react positively. But I believe generally the Fed event will only play, let's say if we take 100% block of news affecting us, Fed event will be about 20%, 80% will be the US election. So that's something which will continue affecting us. Now, the analysis which I've been providing has been working out very well, even what I gave on Sunday's video on stocks and on the mid-cap Nifty. Now, one question that has come is that why did all the indexes technically have a good fall on Monday? Now, obviously the first reason is foreign investors again were sellers. FIs are not stopping the selling, quite good numbers of selling they're doing. And the second reason I believe is the market is now starting to adjust to the new realities. For example, from 4th November, several brokers increased their broker charges. So that is one thing that everyone's going to have to adjust to. Number two, until by November 18th, all the laws that SEBI had put will come into effect. So margins are going to go up, lot sizes are going to go up, indexes are going to get killed out of weekly expiries. So all that is going to cause a lot of uncertainty, which is then made worse by the US election. And generally when there is uncertainty, volatility will come in, and most of the traders and investors will stop thinking logically and just hit the sell button. And that is what is happening. You can look at October. On 25th, 26th September is when I had said the market is going to fall. We shorted the market and I showed that I am very bearish. It fell. But why did it fall so much? Because of the same uncertainty. It actually started the flame. The charts were showing on 25th. If you go to the videos of that time, the charts were showing bearishness, but we did not know the SEBI was going to come after a few days and drop the bomb. So they did that, and that is this. We are still basically having the effect of that, and I believe the effect of that will continue until November 18th. And the only thing that can minimize that effect is the US election going a good way, if it's not drawn out and contested in courts for long. If that happens, then SEBI effect can be dampened, but it will still be there. Now coming to the FinNifty for today. Now the FinNifty for today, a lot of the people who have been watching my FinNifty videos know that a lot of these levels are the same as I've used in the past 2 to 3 weeks. This is as they've been working perfectly. But now for today's trading session, what should we do? Now according to me, as long as we are between 23,960 and 23,700, this is a tight box range that's going to break option buyers completely. This is completely an option sellers box range. So within this box range, as long as we are here, I think option buyers should leave the FinNifty, go to the BANKNIFTY for example, and you'll make easier money there, as the box range there is going to be wider. So between that zone, leave FinNifty. However, if it breaks above 23,960, then option buyers can come in for long to 24,100, which is a really major resistance level. And if that breaks, then 24,200 and 24,250. Inversely, if we break 23,700, option buyers can again come in for a very good shot to 23,560, 23,440 and 23,350. So tomorrow is a 50-50 market. due to the box range which is formed. It is trying to find its way. The trend catcher is down, the volume is in the gutter, so we'll have to see whether a bit of the, what do you call this, FI selling reduces and a bit of positivity comes in, takes us to the resistance, or we're going to break the support and fall straight down. Now, due to the 50-50 thing, option selling comes trickier. Now, as I said, even in yesterday's expiry, for yesterday's expiry, I said I'm using half my usual volume. I'm going to do the same today because October was a great month for option selling, option buying, but November, due to the risk of this week, I believe half volume is what makes sense. Now, if you're an aggressive option seller, I think you can sell calls above 24,100 and puts below 23,560. Now, people ask, why am I not doing 23,960 and 23,700 if I'm aggressive? Because there's a huge risk of spikes coming. For example, if you have sold puts of, let's say, 24,100 and at 24,100 and above, then a spike comes towards the upside, for example. Yes, your option might spike for 1-2 minutes, but then it will cool off. So you will still make a very good profit. But if you are 23,960, you've sold, let's say 23,960 and above, and a spike comes, there's a high likelihood that spike it will die off, basically as we get closer to the expiry 3:30, but might last 1 hour, which most will not be able to tolerate. So they will end up closing in a loss. So that is why aggressive, I'm taking a further stance rather than going into 23,960 and 23,700. Cautious, 23,400 and above and 23,440 and below. That is I'm most likely going to take the aggressive stance, and I will sell both calls and puts and keep them with a profit stop. If we break out of one side, then that side will naturally get stopped out, the profit will be taken, and the other side will ride towards the zero mark. So that is how I'm going to trade, and let's see how it goes. If you liked the video, then hit that like button and subscribe to the channel. And any questions, drop them in the comment section below. Any stocks you want analyzed, drop them in the comment section below too. Thank you.